Hey guys, Will Terry here, and today's video is going to be called Business Advice for Artists. And before I get going on that, I've got to make a few announcements usually. And so the first one is that with SVS, learn.com, and I have a link for it down here, a lot of confusion, or not a lot, but some questions coming in. Will, can we really get the children's book class that you were selling for $300 under the subscription for $14.99? And yes, you can. I just want to make sure that everybody's clear on that. A lot of people there was some misinformation going out that no, that's not included for some reason, but it is indeed. The second thing is on the screen right now, you're seeing that I have completely finished my Star Wars poster for Comic-Con, and I just thought I'd share that with you tonight. And if you look in the lower left, there's kind of a little pun going on between Darth and Jar Jar. Anyway, so I was just going to move right on into this video, and I've been getting a lot of emails from people asking for business advice, and this is over the years, and I've kind of shied away from that. One, because we are going to do a class at SVS, a complete business class, where I think we will actually pay a CPA to do it. One of the things is I'm going to give a complete disclaimer. And one of the reasons why I've answered a few other people, and I apologize to you if even in last week I got an email from somebody, and I can't remember your name, but I told you I didn't want to do it because I was worried about getting into trouble. Well, then I got this email today that I'm going to read, and I've just decided to do it in a way that hopefully I don't get into trouble. The SEC, if I give legal advice on taxes, I could get in big trouble because I'm not a CPA. So I'm not giving legal advice. I'm giving suggestions of things that I've heard, things that I've learned along the way. But this is in no way meant to be tax advice for you. So that's my disclaimer here. I'm not going to be giving tax advice. I'm going to be telling you the things that I do, and then you can make decisions on your own. So I'm going to read this email here from Casey. Blah, 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 blah. My questions actually pertain to more of the office side of the business. Things like what sorts of things can be written off on taxes as an illustrator, and what do you do about health insurance before you've made enough to really afford it? I just want to make sure I don't overlook anything that could help me out in the long run. I'm in the process of relocating from Texas to Colorado with just enough savings, blah, blah, blah. Let's see. And then goes on to book illustration is what I have always wanted to do since I was a kid. Those storyboarding and graphic novels have always appealed to me as well. I have been watching some of your YouTube videos, and they're really super helpful. Thank you for making them. And then, okay, so let's see. I have a portfolio that needs updating and things like that. Okay, so I can answer some of this. I don't really want to get into the health insurance aspect because that's so different for everybody. And some people qualify for different things. I apologize ahead of time. I'm not going to be a help on health insurance. We buy our own. It's and through different groups and things, there's probably different ways to get some breaks, and advantages there. And I just don't want to go down that road. It is expensive. And if you're a freelancer, one thing that I want to say before I actually get into a lot of this is that one piece of advice that I think holds fairly true is that if you make, let's say you're working for some place and you're making $10 an hour, or $15 an hour, $20 an hour, whatever it is. In order to go freelance, purely freelance, and working on your own, you really need to be billing the equivalent of 2 to 3 times what you get working in-house. And I'm going to go over some of that in this and the whys to that. But you need to be, because of your expenses and because of all the perks you don't get working on your own that you would get in working for someone else, it's just kind of a general rule of thumb that, and a lot of people are strict about 3 times as much. So if you make $20 an hour, you need to be billing $60 an hour to basically make the same amount. Simply because you're buying your own health insurance. That's the big one. You're going to pay double Social Security, and I'm going to get to that. And then you're also going to have to buy all your supplies, your computers, and and all sorts of, all the office equipment and things like that. So, and then the other part of that is downtime. So because if you work a 40-hour week for a company, you're getting 40 hours a week. I'm assuming this, 35, 40 hour, whatever you're getting, but it's regular, it's steady for a lot of people. And that steadiness is giving you about the same check every month. So, you have bills, you can pay those bills because you know what's coming in. And with freelance, it's up and down, and sometimes you'll have some big ups and sometimes you'll have some big downs. And you have to be able to weather those downs. And so they say the general rule of thumb really is about 3 times. I know some people have gone and been really frugal and made it estimating about 2.5 times, but I think you're safer to estimate 3 times. Okay. So as far as setting up your home office, let's talk about that a little bit. One big mistake that I have seen a lot of people make is they get gung-ho and they decide, I am going to be a freelancer. I'm going to work at home. And the tendency is you want to be proactive. You want to get going. You want to start doing something so that you feel good inside. Like you feel like, well, I'm doing something. And one of the biggest mistakes people make is they run off to their local office store like Home Depot, like Staples or Office Max or something like that. And they just start spending money buying all kinds of supplies so they can be completely set up, so they can be all ready for nothing to happen, right? And so, and I know a guy who did this, who spent, a couple $1,000s, even probably more, like $3,000 right off the bat, money that he really shouldn't have spent on that, and had other things that he could have spent it on. And money was really tight after that because he got a new fax machine, he got a brand new computer, he got everything, new office chairs, new office furniture, just everything, and decked out his office, And the general rule of thumb, if you want to be successful, is if you can do without, do without, Now there's certain things and I talked about my computer setup. If you want to check out that video, Mac versus PC, on my channel, I talk about my personal computer setup that I got. This PC is a screamer. It does not lag at all. I can make nice big files. I feel like that was you guys ever heard of the principle guns and butters? And don't get freaked out if you're anti-gun. But basically the idea of guns versus butter is that guns are tools that you can use to hunt and to get stuff and to get things done. And butter is like stuff that it's nice to have butter. You spread it on your toast, it tastes good and all, but you don't need it. And I think this comes from way back when you had to hunt to put food on the table. A gun could get you food that you need to have, and butter's the fluff. So think of it in terms of that, and ask yourself a question: do I need this? And if you don't need it, then try to do without and try to preserve your money. That's one thing. And I'll say this: my car right now is 10 years old. We're planning to get a new car, and we've got the money right now to get a new car. But I've been holding off because I've gotten it so in the mode of withholding money and keeping money, because it's a safety net. I gave my channel a video, and you might want to check it out. Why I'm glad I didn't get free money. You might want to check that one out, where I talk about how I lost everything. What a stressful time that was in my life, but because I didn't learn to live by this principle. So by going the hard way, I can tell you that saving your money is definitely the way to go. And you guys probably already know that. Okay, so let's see. So let's talk about entities real quick. And again, I cannot give you advice on what entity you should be. Now, I'm going to apologize to anybody watching my channel from overseas, because I live in the U.S. obviously, and I'm going to give you basically advice on what it's like here. I don't know what it's like in your country, and I apologize for that. That I don't know if some of this will help or not. I hope it will apply in some ways, but over here in the States, if you're operating by yourself, and you're just going to fill out your taxes, and it's just you're going to fill them out for your personal self and say, hey, I did some freelance this year and I made 10,000, I made 20,000, I made 50,000, whatever it was. As far as the government's concerned, you're going to be considered a sole proprietorship, right? And that just means you're filling out taxes as yourself, that you earn this money and you're going to be paying taxes on it. Your other options are an LLC is another one, a limited liability company, and an S corp. One of the advantages of an LLC is that you're doing business in the name of a company, and so one of the biggest advantages of an LLC is that if for some reason you got sued, and someone came after you, and maybe somebody came up to your house and they slipped and fell or something, and they wanted to sue you, and then you can keep yourself separate from your business is separate from you. So if it's at your house or at your apartment or something, and somebody slipped and fell, and they're like, well, I'm going to take you for all you have. Your company has holdings and has assets, and then that's separate from you. So whatever they can get you from is like what's in your bank account, but maybe your business bank account has a lot more than that, and they can't attach that. Really, it doesn't come into play that much to me. Now, this is, again, I'm not giving advice on what entity you should be, and you really need to contact a CPA to get advice, a certified public accountant to get advice on what entity you should set yourself up as. I incorporated as an S corp, so that's a small business corporation. That's another possibility, an S corp. And the advantages there are what I'm going to talk about a little bit more too. Let's see here. I'm just going to try to get my notes. I just kind of went through this pretty quickly today, but it's just, again, this is just a general idea of setting up, and I hope that this helps some of you. So I think I'm going to get rid of the Star Wars here and do a little doodling here, and you can look up these entities and see, and again, talk to an accountant to see which one you think would be best for you. But let's see, what should we talk about first here? Just want to make sure. Let's just go through these deductions, and that's interesting. I want this right. Sometimes I get a glitch. Oh, how fun. Oh, that's because I got the right. Oh, there we go. Okay, deductions. And that's pretty much what I'm going to talk about in this, is things that you can deduct. Again, this is stuff that I've heard. I don't know if this is accurate or not, right? I have to keep doing this because I want to make sure that you know that I'm not giving you any tax advice. These are just ideas, right? I have heard that you can deduct your office square footage, right? So one advantage and one strategy that I have heard some people using, could be me, could be someone else. I hate that I have to talk this cryptically, but I do, because I'm scared of what can happen. I have this office right here, but I also have part of the garage that I use for storage, like for my postcards and posters and files and books and all kinds of extra things that I keep out there. So what I've done is I've added up the total square footage of my house, and I have deducted this whole room, because this whole room that I'm in right here is all used for my studio. And then a part of the garage square footage where my stuff is stored, I can deduct that as well. I add them together and I deduct that from the total square footage of the house. So basically what I do is I say, like, let's say my rent or my mortgage is, and I'm just going to throw out a round number. Let's say my rent is $1,000 per month, right? And let's say I have a 2,000 square foot house, and let's say I am using 200 square feet. So that is 1/10 basically, right? That's 10% of the house. So I can deduct, logically, I can deduct $100, right, a month. Now that's a possibility. That's one way of doing it. There's a lot of different ways of doing it. Check with your CPA, because sometimes I have heard that other people can say, well, what's a going rent for a business in the area? What would it cost if you rented this room for someone to come in and use as a business? And you can sometimes charge more for that and get more out of it. So that's a possibility there. So when you're setting up your home studio, one thing you might want to think of is, maybe you want the master bedroom. Maybe you're willing to sleep in a smaller room so that you can have a bigger room, or maybe you want to use the whole basement or a part of the basement. You can use unfinished square footage. I think that counts too. But if the more you use, the more you can deduct, and the more you can save on your taxes. Okay, so that's something to think about. Okay. Keep all of your receipts. Okay. And this is something I don't know. Is that how you spell it? Somebody will correct me in the comments. Everybody knows this, but keep all your receipts, because now don't keep receipts of like toys that you bought your kids for Christmas, because those are probably not tax deductible. But keep things that you've bought for your business, and that's just kind of like rule number one. If you're and I know that's pretty much the same for everybody, but it's even more important when you're doing a home business. Okay, you might want to use a product called like QuickBooks or something like that to keep track of all your expenses and things like that. Okay, so the first thing is make sure that you keep track of your mileage in your car. So there's a few different ways to do this. One way is and most people can't do this, so it's almost not even worth mentioning, but if you have a car that's dedicated to your business, and in other words, you're only going to use it for business purposes, like a delivery truck or something like that, then you don't have to keep track of your mileage. You can just do the start mileage and the end mileage at the end of the year and say, well, I drove 10,000 miles during the year, and so I'm going to deduct 10,000 miles, and you get a certain amount per mile, 40 some cents or 50 cents or whatever a mile, and you can deduct that total sum off your taxes. The other way is really a pain in the butt, and everybody hates this, but it is so worth it to do, is to keep track of your mileage with a little mileage book. And so you're going to the store, or you're going to drop off your kid at school. So you go and drop your kid off at school, and then you drive home. You can't deduct that. But let's say you come home, and then you drive to Staples, and then you come back home. Now you can deduct the mileage to and from Staples. The smart thing to do is when you drop off your kid, go to Staples, and now that whole trip is deductible. Not the mileage if it's a big difference of like from the school and you had to go clear over to Staples and then home. You really should only deduct the mileage between Staples and home. But most of the time, and this is like the number one rule, the lifestyle of the freelancer or the self-employed person, is to try your best. And this gets hard. Some people are really good at it. Some people would rather just pay the extra money in taxes to not worry about it. You have to decide where you are, because it can be a pain. But if you get it into your lifestyle of always trying to combine a trip, I'm going over across town. Can I stop at the art store? Or I'm going across town. Can I stop at the frame store? Or I'm going across town. Can I stop at the office store or the computer store? There's often something that you need for your business, and it doesn't really even matter, so I've been told, whether or not you are, let's say you're making it up and you want to buy some brushes. You want to buy one brush and you stop at the art store. You've now got a receipt from that art store where you went over there and you bought a brush and then you came home. So what if you dropped your kid off at school on the way? You went to that art store and you came home. So that's what I have been told that works. One other thing, and I've mentioned this in another video, my CPA told me this, and I think it's good advice. Pigs get fat, hogs get slaughtered. So if the grayer the area you get into makes you more of a hog, and that makes you more ripe for getting audited. Now, combining trips like that to me is a very, very white area. That's the life of a business owner, because it's locked in with that receipt. I went to this art store and I came home, and that's why I have the mileage for that in my book. And it's no question. If you were to be audited, you have a receipt that locks you into that mileage. So to me, that's a no-brainer on mileage. Let's talk about vacations a little bit. So if you go on a vacation, can you deduct some of that? Now, this is where I'm really fuzzy, because I learned a lot about this years ago, and so I have to constantly kind of talk to my accountant and find out the rules on vacation. So I don't want to really give you a ton, but let's say, here's an example of what I think might be accurate. Let's say you go on vacation and you're going to go for a week to Hawaii. And while you're in Hawaii, you do a school visit. Now, you go over there and you're going to pay for your hotel for the whole week, right? But you're doing a school visit that's not a school visit where you're doing like fire safety or something, but something related to your art. Like you're there to show your children's books or your paintings or whatever it is. From what I understand, you can deduct the day's expenses for when you're there. You might be able to deduct the airfare for the whole thing, but you probably shouldn't deduct the hotel for the whole week that you were on the beach. So what you would do is deduct maybe 2 nights of the hotel, because you'd have to fly in, stay overnight, and then do your thing, and then you might stay another night and then go home. So that would be reasonable. But the IRS, if they look at you, they're going to say, well, why did you did a school visit one day, but you deducted a whole week? And that, again, it's also what makes sense and what is reasonable and logical, things like that. But there are a lot of things that you can do on vacation to save money. And one thing that some people will do is they'll schedule something on the front end and on the back end of that vacation, where they have like maybe an art show on the front end, and then maybe they have an art conference or something, or 2 events, but there's time in the middle. And on that, I have heard that some artists will deduct the whole thing, because they're like, well, I had to be there for the week because I had an event in the front end and the back end. So you can get very creative on how you schedule things and where you stop. And one thing that you wouldn't want to do is you wouldn't want to go, live in California and go to on a vacation on the East Coast, stop at a frame shop, buy a frame, and then deduct your whole trip. Because any logical person would say, well, why couldn't you buy that frame back in California where you're from? And it better be a really special frame, encrusted with diamonds or gold leaf or something that you can only get on the East Coast. Otherwise, that's again where you're going to get slaughtered. Okay, let's move on. And these are just kind of, again, these are things that I have heard, things that I've been told. But you can, another thing that I've learned about the phone, let's talk about the phone for a second. Let's say you have a landline, but you also have a cell phone. It's logical that you got the cell phone to run your business, or it's logical that you got the landline to run your business. Where you'll probably get into trouble is if you deduct both for your business, because the IRS pretty much figures that everybody has a phone, and so they're not going to just let you deduct your regular personal phone for your business. So, but it is very logical to have a dedicated line, either a landline or a cell phone, for your business. But in order to deduct that, for me, I would not deduct that phone unless I had another phone in the house. Now, what you might be able to say is, and I don't know the answer to this one, so you might want to check, but like if your spouse or your girlfriend or somebody, your boyfriend, has a phone, that could be considered perhaps the home phone. I don't know about cell phones, because usually a cell phone is linked to a person. But if you had the landline, that's the easiest thing, because the landline stays with the home, and then you can deduct the cell phone. Let's talk about utilities. So again, with that square footage, when we're looking at right here, If you've got 10%, 10% dedicated to the house or to the square footage of the room, it's logical that you could deduct 10% of your electric bill and also your maybe your gas bill and maybe your water bill. Okay, excuse me, if you have those. So you would deduct. You would take. Let's say your electric bill is $100. So then every month you might take off $10 for that, and then your gas. Let's say your gas is $50, so you might take off $5 there, and then your water's another maybe $50 or something. So you get an extra $20 perhaps deduction on utilities. I would think that would be okay. I hate having to talk like this. Office equipment. So office equipment is treated a little bit differently. Like, let's say computers and not fax machines, but printers. I'm looking at my printer right now. Landline phones, office equipment, electronics, and things like that. This microphone, your tablets and things like that, office equipment. That stuff has to be what they call depreciated, and that's something that you should talk to your accountant about. That basically means you can't take the full deduction when you buy it. You buy a computer for $1,000, you cannot deduct $1,000 off of your taxes, as far as I'm aware. You can deduct a portion of that over time. Not sure why that's the rule. Maybe they think that you're going to sell it and they don't want you to get the full deduction the first year. That seems logical to me. So they let you take a part of it for, like, I think 3 or 4 or 5 years, something like that. Again, that's something that your accountant will know. Same with furniture. If you buy office furniture, I believe that you cannot deduct the whole thing all at once. One of the reasons why I'm saying I believe is because I'm using the desk that I bought when I was still in college. I got a really, really nice desk at the surplus sale, a drafting desk. It's a huge, beautiful wooden desk that I have now had for 25 years. I live frugally because I get to keep more money that way. So I don't buy a lot of new office equipment and stuff. The computers, and the Cintiq monitors, my guilty, the biggest purchases I've made for my business in a while. iPads and computers. Here's a strategy that I do, and I don't know if my wife really likes this one, but whenever the family gets a new iPad, guess who gets it? It's me, because I'm special. No, because I run the business, and so I can deduct that. I can get an iPad and get that tax deduction, and then because I get that, I give her my old one, so she gets the hand-me-down. So if she wants a new iPad, guess who gets a new one first? Is me. And if she was running the business, it would be the reverse of that. But that allows us to get that deduction. If I bought her a new one, which she gets plenty of new stuff. Don't feel bad for her. She knows how to spend some money. If we got hers, we wouldn't be able to get that deduction at all. So it makes sense and it's smart. Think of anything that you buy for your business as a potential tax deduction. So like your website fees, here's one that I personally do, and I'm not advising you to do this, but like I get high-speed internet here because I do the svslearn.com classes, and I need to have really good internet. We've got a bunch of users in the house, a bunch of my kids that are using the internet, and I can't afford to be low on bandwidth. So I get the higher service, but I deduct that extra from the standard service from Comcast, and the difference is I take completely as a deduction for my business. Now, I'm not advising you to do that. I'm saying that's what I do, and if the IRS doesn't like it, then they can tell me they don't like it, and if I get audited, then, and a lot of people don't understand what happens, like if they take a deduction, there's really a couple things that can happen. There's judgment calls, and I can't remember what they call those, but they're not like that. It's a judgment call, and then there's fraud. There's tax fraud where you you make, $200,000 in a year, and you report that you made 100,000. That, and you knowingly did that. You know you made 200,000, and you reported 100,000. That's fraud. What we're talking about is a judgment. You are deducting something that you think is okay, and the IRS treats that very differently. They're not looking to destroy you on things like that. So, for me, I would rather take the risk of taking that deduction and having them say, you know what, that's not okay. Let's figure that out real quick. Let's say that the extra service, the extra expense is $30 a month, right? So let's say my Comcast bill is, my normal standard service is $50 a month, but I add 30, so I get a total of $80 a month. Okay, I'm trying to write and talk at the same time. So $80 a month, but I'm only going to deduct from my business $30 a month for that, because that's the extra service. Remember, the family's using it, so it would be really wrong for me to take that full $80 deduction. But let's say what I do is I say, okay, I'm gonna take this $30, so let's times that out by 12, and what do we get? It's 300. Is it 360? I'm dyslexic here. Is that right? $30 a month times 10. Yeah, nope. 340, 360. Yeah, 360. So 300. Let me write that better. $360 is what I'm taking as a deduction. Now, let's say the IRS does not like that. Let's say that I can't take that deduction. So what ends up happening is I have to add that income back into my total income and pay taxes on that $360 that I deducted. So if I'm in a 20% tax bracket, that's like $70 that I'd have to pay as a penalty. It's not the end of the world, but if you have a lot of these and you were to get audited and you were to get dinged, it could add up, and it's important. But I think some people are so afraid of taking any kind of a deduction at all that they don't take anything. And the rule with taxes is that the IRS doesn't even know the tax code. The tax code is so huge and crazy and convoluted that the IRS doesn't even know it. And their answer is, you better be on the safe side. If you call the IRS and say, hey, what's the rule on this? They'll say a lot of times, you know what? We don't know. They really will. They'll say that. But then they'll say, to be on the safe side, you might want to pay that. What does that mean, to be on the safe side? That's kind of my thing right there, is that I go ahead and take that deduction right there. And I don't think that there's anything wrong with it. I'm just going to get rid of this stuff here too. Okay, so let's look at the next thing, which would be like, I've been talking about that I'm going to be doing Comic-Con. So any expense that I have that's related to Comic-Con, from my banner to my booth space, the banner that I'm going to have in the backdrop, all the printed material that I'm going to sell, the mileage to and from Comic-Con, what other fees am I going to have? The display setup, any other fees, anything that I'm paying, parking, all those expenses that are related for me to get myself to Comic-Con, get all the stuff that I've bought leading up. If I have a kit of like tape and markers and pens and cards and things to pass out, anything, all that stuff is tax deductible. So you need to keep your receipts on that stuff. Think about things like services that you buy too, like Dropbox. I have a Dropbox account that I pay for because I need all that space. So Dropbox is deductible. And I think if you're more from the art side, the fine art side or the gallery side, and you're framing things, all of your framing costs are tax deductible. Now let's talk about meals. Meals is a dicey one. The rules keep changing on that, so I don't know what to tell you on that one. I keep my receipts and I let my accountant decide. But there is a differentiation between, like, let's say you are going to sell a painting, and you say, and you got this painting that's like worth $20,000 and you're dying to sell it. And so you are going to meet with a client, and you're going to meet and have lunch. And because they're going to buy it, you're going to buy the lunch. I think that on that one you can get something like a 50% deduction. So if your meal costs, 30 bucks, you might be able to deduct $15. Again, you got to check on that one because I do not know if that's accurate. I've heard that that meeting in the town that you live in disqualifies that one, but I'm not sure about that. So check, and I think different states are different too for state taxes. So check on that. If you're going to have a business meeting, I think it's different, and you might be able to deduct 100% for that. Like, let's say you have a company, you're working with more than one person, more than one artist or something, and you are going to have a company meeting, and you meet somewhere. I think you can deduct the whole thing on that, but I'm not sure. So let's just look at one last thing here and just say, and I want to talk about the reason to go. So we got sole proprietor. I should know how to spell this. Let's see. Proprietor. Is that right? You got a sole proprietor or whatever that is that I just spelled right there. And then you've got what I have is an S Corp. Or you could have an LLC. And I'm not sure. I don't want to include the LLC because I'm not sure about that. I think it's only when you incorporate. But I want to talk about what happens with Social Security, otherwise known as FICA. And so when you're yourself, and you are, let's say you make $40,000 in a year. And let's say you make $40,000 in a year over here. They're treated differently tax-wise, and I just want to explore that just a little bit. When you make $40,000 as a sole proprietor, you get to deduct all those things we talked about, all those receipts, and let's say you can get your earnings down to $30,000, then you're going to pay taxes on that $30,000. And let's say, and I want to do a round number. I don't know what tax bracket that would put you in. Probably not very high, but I'm going to just stick with 20% just because it's easy. So if you were paying 20% taxes on that $30,000, you would end up paying $6,000 in taxes, right? And with the S Corp, the thing that you have to do when you formulate an S Corp is, one, you got to pay for it, and I think these can cost anywhere from $500 to maybe even $1,000 to get it set up. So it's kind of pricey, and it kind of hurts because at the end of the day, after you spend that money, it's not like you got a brand new Xbox or PlayStation or something fun. You spend $1,000 and you got this. Now you got an S Corp, But then what you have to do is you have to decide what your salary is going to be. And for an illustrator in the area that you're in, it's going to depend a little bit. Out here where I live in Utah, I would say $40,000 is a pretty good salary, a pretty average salary for an illustrator, $30,000 to $40,000 a year. So there's not going to be any advantage here, and I'll show you why. But basically, if I set my salary at $40,000, I'm going to be paying that same roughly $6,000, right? Now, this is according to all things being equal and everything like that. But let's say that the money goes up. So a lot of people wonder, like, when you should incorporate, what's the advantage, when you should, and all that kind of stuff. So that's where this kind of comes in. And again, you know what? I really don't know this that well. So if you guys know it better, and if you're watching this video, to get help, you might want to scroll down through the comments, because one thing that I've noticed on YouTube is if somebody gets it wrong, like me, there will be someone out there that will be more than happy to correct me. And on this stuff, I am more than happy to have you correct me. And you can take their advice, or you can check things out. But let's say you move up to, and this is what happened to me. I started getting close to $100,000 one year, back in the 90s. And I went through and did my taxes, and I ended up having to write a check to the IRS for about $27,000. Now, that hurts, and that really got me thinking about taxes and the rates that we pay and why we pay so much. And I could not believe, because in my bank account I had saved up about $25,000, and I had to come up with an extra $2,000 to pay my taxes that year, and it wiped. I mean, I was looking at $27,000. It was more money than I had ever had, but I knew I had this tax bill coming, so I was saving as much as I could for it, and it wiped out everything that I had. I thought my tax bill might be around $10,000 or $13,000 at the most, and it was this crazy tax bill. And my accountant at the time said, "You're at the point where I think an S corp might benefit you." And so then the next year I went ahead and incorporated. And this is where it gets to judgment calls, because again, and some people think this is unethical. Personally, I have no problem with it. I feel personally like it is my responsibility to take care of my family. The tax code is there. If you tell the IRS that you owe them $10,000, then they're going to say, "Thank you for your $10,000." If you tell them you owe $20,000, thank you for your $20,000. Now, if you really legally totally can do $10,000 and there's no problem that the IRS has, but they're still willing to take your $20,000, there's a problem there, because the system is not set up to protect you. It's set up to protect the IRS, the tax collection service, right? And so they're never going to say, "Hey, you overpaid. You didn't know all this." I mean, there are some times where that will happen on your forms, but that's usually if you filled out your forms wrong. But if you, let's say, and I talked about what deductions you're allowed to take and what you're not allowed to take and stuff. And sometimes people forget deductions. Some people don't know that they can deduct things a certain way. Sometimes people don't know they can structure things certain ways. And they basically tell the IRS that they owe double what they actually could have gotten away with. Getting away with is kind of the wrong term, but legally have no problem paying and not getting in trouble, not getting audited or anything, and saying, "Hey, you underpaid," where the IRS would totally accept. You can end up paying, a ton more. Now, by this time, I have spoken so long that I forgot what my point was, but basically the idea is that you can overpay and they will take that money. So where I was trying to go with that is, in my world view of taxes and tax collection and stuff, it is in our best interest to pay the least amount of taxes, because that's what everyone is doing, and that's why the tax code is set up for a certain way to make you pay taxes on some things. But if it's set up so that it's legal, and this is kind of a hard way to say this, but if it's legal to pay $10,000, then I wouldn't feel bad for paying $10,000, even though somebody else in your same situation is paying $20. Just because they're paying $20 doesn't mean they're right. You're right at $10, if that makes any sense. Now, some people have a problem with this next part. So, and I know this is running on pretty long, but anyway, let's say we have the same $100,000 going in over here on the S corp, right? And again, some people will say, "Well, you earned $100,000." Well, no, I didn't, because in my opinion, because I am not working for a company. When I work for a company, they give me a 401k sometimes. They give me other retirement benefits. They buy my computer. They pay for all the electricity and all that stuff. They pay for half of the Social Security, and they pay for health insurance and things like that. So all those things roll together. Again, if I make $100,000 at a company, I'm making way more than that because of all those benefits that I'm getting. When I make $100,000 by myself, I'm not actually making that because of all those other things that are coming out. So one of the things, and this is where people disagree, is where to set that salary. Okay, some people might say, "Hey, I know some illustrators in my area that only get paid $25,000 a year, and so I'm going to take the rest of that money. I'm going to pay myself $25,000, and $75,000 of that money I'm going to take in dividends." Okay, so you get dividends, and you can take those throughout the year, and you need to make sure that you set up a business account. So this is another thing at the bank. You're going to want to set up a business account. And it is a pain. You got to pay quarterly taxes if you do it this way. If you incorporate, you definitely have to have a business account by law. You can't run that through a regular account, and it's not that hard to get a business account. And what you do is you pay your quarterly taxes through them. And so anyway, that's a whole nother thing. But anyway, so some other people might say, you know what, though, the average salary for an illustrator in my area is $35,000. So some people might be comfortable taking a $35,000 salary. Other people who just love paying taxes. I mean, there are people like Warren Buffett who's like, hey, I wish I could pay more taxes, right? So Warren Buffett might say, you know, I made $100,000. I'm going to give myself a salary of $90,000, and by so doing, it would be stupid for him to even be an S corp because he wouldn't get the benefit that I'm getting ready to show you. But whatever you end up taking, the rest that's left over, in this case it's $35,000, it will leave $65,000 in dividends. And if you took $40,000, right, it would leave $60,000 for dividends. And what happens with those dividends when you take those? You take a chunk of money, and let's say you take $5,000 of that $60,000 one month. The big advantage is you're not going to pay. Oh, and I might want to say this. So if you work for an employer with this FICA right here, when you work for a business, you pay let's say you're making, let's keep with that round number. So you make $100,000 through a business, right? I know this is getting convoluted. Then your employer is going to deduct $7,500 out of your paycheck, or roughly that. And those are, from what I understand, you got to pay that before your deductions. So $7,500 is going to Social Security no matter what, right? But the other story that a lot of people don't understand when they complain about business is your employer has to match this, and they have to pay another $7,500 just for the sake of having you, just for the joy of being able to have you as an employee. And they pay another $7,500, and that together, that equals, and that's 7.5% for each of you, or 15% total, has to be paid for everybody in the country, whether they're working for an employer or by yourself. The difference is when you work by yourself, guess what? You get to pay this whole thing all by yourself. So again, we nail the small business guy. So what happens is over here, when you make this $100,000, right? You're paying 20% in taxes, which we showed was we didn't do that on this. Let's say over here, as a sole proprietor, you pay $20,000 in taxes, right? Which you're not going to pay because you have a ton of deductions and stuff like that. But what you will pay is $15,000 is going to come out no matter what, before any deductions. So your minimum bill is going to be $15,000, or roughly that, plus your federal and state taxes are coming out of that as well. Now, over on this side, over here, let's go with the $35,000 and the $65,000. Let's do the 40 because that's going to be a rounder number. It's going to be easier. So you paid yourself a salary of $40,000, 60. Now, guess what? You pay 20% tax on the 40, which would end up being, what is that? $8,000? Yeah, $8,000. Is that right? Yeah, $8,000. And then guess what? You don't pay that on. You pay your taxes out of the 60, but you don't pay any FICA. So you pay $8,000 plus 15%, which is going to be, gosh, what's the math on that? $46,000 plus $6,000. So you're going to pay over here. You're going to pay 15 plus whatever your tax is. Over here, you're going to pay 14,000 plus a little bit of tax on the 16. Over here, in years that I've seen, I'm around, like I said, 27,000 with the Social Security and taxes together. and then over on this other side, probably more like 18,000 or something like that. So which tax bill would you rather have, the 27,000 or the 18,000? The S corp can save you money, and the more money you make over 100,000, or as it goes up, the savings get even better and better with that Social Security that you're missing out on. So on my highest year, I think I made somewhere around $130,000, and so it really paid off that year to not be paying all that Social Security money in. Okay, so this right here is just one guy's ramblings and scramblings, and it's not tax advice because it's just my ideas of what I've done, and it doesn't really apply to you. And so don't take this. Go get help from a CPA. Get advice from those guys, and don't take my advice for anything like that at all. And take my son's advice and subscribe if you like videos like this, and if you don't, then don't subscribe, and I will see you soon on the next one.